Welcome back to Wealthy Mentor Trading, guys. Today is July the 24th, 2022. And in today's video, I'm going to be discussing 5 blue chip stocks, all reporting earnings this upcoming week. But before we get started, guys, please give this video a thumbs up, share it with your friends. And if you haven't subscribed to the channel already, click that subscribe button as we do release videos every Sunday. And if you are interested in trading with us on our Discord group, Wealthy Mentor Trading, we do have a 2-month $97 promo going on right now. It is our summer event special, and it involves names like, swing trading, day trading, options trading, analyst callouts, prepping you for the morning watch list, and the whole 9 yards. And if you are interested in that, click that link in the description, and that should get you started. As I did mention, I have 5 blue chip stocks, names like Google, Microsoft, Meta, Apple, and Amazon, all reporting their earnings this week. It is a big week in the market, so I am going to switch over here. And as you guys can see here, I do have the S&P 500 chart. And overall, last week, we did step in the right direction. As you guys can see here, we did hold that 3720 area, and we continue to stay above 3800, which was that key area for me to continue this trend upwards, right? So what did we see last week? We had a nice move all the way to testing that 4015 area where we did fill that gap momentarily, and we did have a slight pullback on Friday, which was given since we had 3 straight green days of overall bull action. And to me, as I did mention to my students, this was the first hurdle that we need to get past, and we're there, right? So the next thing that I'm looking at is a continued move forward. As I did mention, these 5 earnings that we do have really have a strong hold on the market. And as you guys can see, names like Netflix really propelled the market higher. And you can only imagine names like Amazon, Apple, Microsoft, Google all have a strong hold on the S&P 500. So again, guys, I am looking at that 4015 area as my first area of resistance to get by. And if we do get past that, I do have my first target of $4,090, which is the bottom of this consolidation area, right? So that is my first area that I want to see hit. Now, I'm not expecting it to go all the way past that, as I do have my second take profit target at 4175, and that is strong resistance, right? So my first hurdle was getting past that 3925 area, and luckily we closed above that. So these earnings definitely have given us the opportunity to definitely push up here to 4090 and 4175. So those are my 2 targets going in, and these names definitely have that opportunity to propel the market even higher. This is my second hurdle that I want to see. Overall, we haven't changed the trend whatsoever. However, it is nice that we stayed above 3800, and now we are definitely looking at these numbers of 4175 and 4300. This is my third hurdle. I'm not going to be looking at that this week because we do have that 4175 as the big elephant in the room. Now, other key factors that are happening this week, we do have a Fed meeting happening on Wednesday. We also have inflation numbers. So it is a jam-packed week full of economical data that can definitely sway the markets in either direction. Be prepared to see a lot of volatility. 1, because of earnings. 2, the Fed meeting. And 3, the inflation numbers, where we could definitely see sideways action until that Fed meeting completes and we do get the results and we get an outlook of where the markets are heading in the upcoming months. So be sure to understand that traders will be on the sidelines waiting for that to happen. So don't force anything and let the trades come to you. Definitely look above that 4015 area as your entry zone to propel you to that take profit area of 4090. As I did mention, all these names that we are going to be discussing today, the 5 names are traded at Wealthy Mentor Trading on our Discord channel. So if you want access to that, click that link in the description. So the first name that I wanted to get going right now is Google. GOOGL is the ticker. And I am going to switch over here to the weekly time frame, right? Just to give you guys a big clear picture of where Google is and what my thoughts are. And as I mentioned, Google reports earnings on Tuesday, and Google is projected to post smaller second quarter profits compared to within a year earlier. So I'm watching personally for a break above 119, and that is my bull target, right? So if I'm a bull, I am looking above 119, and it's clear and simple for you guys. As you guys can see, pure consolidation here, ever since April all the way till today, that we have been between 119 and that 105 area. So as a bull, as someone that is looking at an earnings beat, I am looking at entries above 119 for take profits of 125, which was the bottom of this support area. And as you guys know, previous support does turn into resistance to the upside. So a break above 119, I am instructing students to take profit at that 125 area as a first target. Now, of course, if we do see continued volume, strong market conditions, and obviously the Fed meeting setting the tone for the week, where can I see it going? 131 is that next area, as it is the second area where it was previous support and now turns to resistance on the upside. So look for 125 and 131 as your two targets to the upside if you are a bull and are expecting Google to beat earnings. As I did mention, they are projected to post smaller second quarter profits compared to a year ago. So we could potentially trend sideways into this area right here between 119 and 105 for a little longer, and then see a break downwards, right? Because this is a bear flag formation, guys, on the weekly time frame. And as you guys know, these bear flags on the weekly time frame, they could take a while to, break lower, and earnings is the perfect catalyst for that. So again, to the bear side, 105 is that bottom line for me, and a break below that, I am looking at targets of 99.5 as my first take profit target and 92.5. And as I mentioned, to the upside, where we had previous support, over here we have a nice consolidation area where we did have a bull flag and we broke out higher. Now here we are again testing that bottom area, and a break below, we're testing at the bottom of that previous bull flag that we had back on February 2021. So it's been a long time since we hit these lines right here, and right now it's showing me that it is a bear flag. We can still again consolidate between 119 and 105 before we see a breakdown. So if you are a bear, look at 99.5 and 92.5 as two targets to the downside. All right. My views on Google, I'm more towards neutral, bearish. Neutral, I believe that we are still going to trend sideways, but bearish in the long term because we do have a bear flag on the weekly time frame. All right. Next name, Microsoft, right? Also reporting earnings on Tuesday. MSFT is the ticker. And again, guys, here we are on Microsoft. Nothing but downtrend, right? We had a $350 stock, and here we are consolidating between that 280 area and 246.5. As I did mention, Microsoft does hold earnings call on Tuesday. It is to report a 5% increase in profit to $17.29 billion from a year prior. In June, the company cut its projected forecast, citing the impact of foreign exchange rates as the stronger US dollar takes a toll on Microsoft, right? So what am I watching to the bull side? Very simple. Much like Google, we are in this consolidation area, and I want to see a break above 280 for take profits at that 291.5. And it is an area where we do have resistance, as you guys can see here by these long wicks. This represents buyer rejection, right? So bears stepped in, pushed the price down, and obviously we are in this flag formation where we're building a bear flag, right? So to the upside, we are testing this resistance area of 291, which is a take profit area on Microsoft on an earnings beat. So I am looking for entries above 280. So I will be instructing students with my real-time targets going into Microsoft as they report earnings on Tuesday. Now, as I look at this bear flag on the weekly time frame, we do have support at that 246.5. As you guys can see, it is an area where bulls did step in and protect that line, pretty much keeping this whole formation in a neutral state. So this earnings can definitely catapult this lower, just like Google. We are in a bear flag formation, and a perfect catalyst right now is earnings to push us down for targets of 238 and 230, which was key support here, guys. Bull stepped in around this area back on March 2021, and they pushed it all the way to 262, right? So again, we could see a similar thing right here, breaking that 246 area, coming back down to test 230, and then we could see a bull step in similar to what it was here and a push higher. However, first things first, I am looking at that 246.50 area as my shorting target opportunity, guys. So definitely keep in mind that Microsoft is in a downtrend, right? We are in a bear flag on the weekly time frame, and overall, the market is still in a downtrend, right? The S&P 500 is still, we haven't really done much yet. As I did mention, we got through the first hurdle, great, but it hasn't proven that it has changed the trend. And unless I see a trend change on the S&P 500, I'm talking about the top 500 companies here, guys. Unless I see that, you know, the trend overall on the smaller names, on the singular names like Microsoft, Google, is still bearish, right? So have that in the back of your head and understand that the overall outlook of the market isn't so great. And, compared to what we are here in a downtrend, you could potentially look at these targets of 238 and 230 getting hit before buyers stepping in, right? I'm not saying we could spend a lot of time here. We could wick down here, then bounce back up, but definitely look for 246.50 as an area where you can potentially short. All right. Next name, Meta, META, Facebook. Facebook is one of those names that is also reporting earnings on Wednesday. So Meta is projected to post smaller second quarter profits compared to a year earlier. So already it is in a bearish state, and now their analysts are projecting not the best, right? They're not looking at great profits compared to a year ago. And personally, I'm watching above that 185 line if I'm a bull, right? I have it here for you guys. As you guys can see, last week we did get a rejection at that 185 area, and much of this was a result of earnings reported by Snap and their advertising. So when Snap has bad earnings, and it trickles down to names like Facebook, which is also correlated in a sense. So that was the reason why we got that bearish rejection at that 185. But whether we have those fundamental news outlets or catalysts, it doesn't really matter. If I'm just looking at the chart as it is right now, I'm looking to myself, I'm like, oh, well, this was a $385 stock, and here we are in pretty much a downtrend. So if I was a betting man, I would definitely look to see if we can break that 154 area, and that is key support, guys. So if I'm a bear, and by the looks of this chart, it does look bearish, I am looking at 154 as that line where I could enter to the downside for puts, right at that 137 to 123 area, which was the bottom right here back on March 2020, right? So we're very close to that COVID low, and 154 gives out, you're looking at that 137 take profit target. And I also have 123. And the reason for that is that if you switch over to the monthly chart, guys, we're almost at all-time lows, right here. And that was back on January 2019. It's been a long time. So, we could potentially bounce from here and get past that 185, testing 205 and 225 to the bull side. But if you look at the flag, right, if you look at the flag formation here, again, another bear flag on the monthly time frame, and it looks like it's already broken down, and there's not much stopping it from hitting these two levels of 137 and 123. And as I did mention, they are set to post bearish numbers, smaller than last year's profits, compared to a year ago. So, connect the dots, guys, that we could definitely see Meta go down even lower right now. All right, so back to that weekly time frame. Look above 185 if you're a bull, and a bear below 154. All right, next name that is reporting, Apple, AAPL, right? And Apple had a great week. Much like the S&P 500, it does closely correlate. Apple is one of those names that does have a stronghold on the markets, and they are reporting their earnings on Thursday, and Apple is expected to post a 13% decline in profits to $18.8 billion. So, again, analysts are bearish. based on the number of profits that they're projected to post up. And to me, as a bull, I don't really care about any of that. I am looking at the charts right here, and the first thing that I see that's in my way is that 157.50 area, which is that resistance line, right? So for me as a trader, if that breaks, I am looking at the next area of take profit, which is that 168 area, and it was a key area of resistance, as you guys can see here, guys, right? So we have this big long wick closing the body below it, another wick here closing at the very bottom, and another wick here closing at the bottom. So that 157 area is definitely a magnet, and it is pushing the bulls down in a bearish stance, right? So if you are a bull, you're going to have to see that 168 area where, again, we've had all these rejections, right? So you would want to take profit at that 168 area. And to me, it looks like it's going to break out, but this 157 area is really tough resistance. And personally, with the projected numbers, and apparently they're ready to post a 13% decline. As a bear, what am I looking at? You know, I'm looking at that 150 area. Now, I know this is a tight range from a bull to a bear, and it's just the way it is, right? Apple is one of those names that doesn't move in a large amount, and a drop below 150, we could pretty much test these levels of 138 and 129. Now, I don't envision that completely happening, because for Apple to drop down to 138 and 129, you're definitely going to have to see a major decline in the S&P 500, pretty much back to 3,600 if we see Apple at the number of 129 to 138. So keep that in mind, that you're not going to see a large move on Apple, whether they win and beat earnings or whether they bomb on earnings. You could still see potentially a zone between 157 and 150 slouching around there until we see the next major catalyst, or if you see the S&P 500 move up to that 4185 area, as I mentioned in the beginning of the stream. So me personally, I am neutral on Apple, just because I'm looking at the S&P 500 and they run so close to each other that I'm neutral on the S&P 500, which makes me neutral on Apple. So I think we're going to still stay between 157 and 150 area on this earnings. But if you are one of those betting people, look above that 157 area as your entry. And if you are a bear, look below 150 for targets of 144 and 138. All right, guys. So that is Apple. And the last name, and one of the biggest names, is Amazon, that is reporting earnings on Thursday. So that ticker is AMZN. And again, we are on the weekly time frame. And as I mentioned, they are reporting earnings Thursday, and Amazon will look to return a profit after recording a loss in the first quarter. Online shopping has slumped post-COVID lockdown. You know, when we were all locked down, Amazon was the place to shop. Everyone was getting their stuff, packages delivered via Amazon. And now, since that's closed down, sorry, not just say closed down, slowed down, Amazon could potentially miss on their second quarter earnings, right? So keep that in mind, guys. They are battling the whole post-COVID lockdown thing. The company has also battled raising costs. So, you know, if I look at the chart specifically right now, we are stuck between 127, right, and 101. 127 would be my area for entry, and we did close near that on Friday. So we are close for a breakout, and earnings can definitely give us that catalyst to push us forward, right? So I do have that 135 and 144 as my two take profit areas. It was previous support right here. To the upside, we are going to see resistance. And the next major area of resistance, which is my second take profit area, is 144. If you guys look at here, prior history back in 2020, it held at key support. Once more here, it held in 2020 as key support. And these wicks right here closed above 144. So guys, we have major resistance up here at 144. So definitely take profits if Amazon does shoot up to 144, because we're definitely going to get a buyer rejection around that area. So that's if you're a bull. Now, if you're a bear, we're pretty much going to be hanging around that 127 to 101 area. I don't envision 101 breaking. However, if we do get a bearish earnings, right, look for 101 to break for take profits at 84. right? And $81, as you guys can see here that I mentioned, right? This is the bottom right here back on 2020 March. So this is the COVID lows. Uh, Shorting opportunity at 101. What do I think? I think we're still going to slouch around here, holding that support area because I don't believe that Amazon is going to go any lower than this. However, that's just my thoughts. We could potentially receive bearish earnings and hit that $84 to $81 area. But keep in mind, just like Apple, the S&P 500 is going to get beaten up pretty badly. So if you're seeing S&P 500 getting rejected at 4,000 and hitting back to 3,600, that's where you'll see Amazon at 84 and 81 when S&P 500 is hovering around that 37 to $3,600 area. So, you know, bullish earnings or neutral, right? Slouch around 127, 101. So that's my views on Amazon, and those two levels that you should definitely watch. All right, guys. So those were 5 key stocks that all reporting earnings. Keep those names in mind. It is a big week. We do have that Fed meeting on Wednesday. Don't ignore that because the market could be on standstill until we get those results from Jay Powell, right? And the inflation numbers, as you guys know, it is that big thing that investors like to look at. The banks are waiting for that. The overall market really hinges on these inflation numbers. As you guys know, inflation has been incredibly high this year and has been moving higher ever since the COVID the drop. So keep that in mind as you are a trader in these markets. Thank you so much for joining us. Be sure to subscribe. And if you are interested in trading with us, click that link in the description as we do have that 97 2-month promo going on right now. All right, guys. See you next week.